Hello and welcome. Thank you everybody for coming and watching our video. My name is Ntombenhle Radebe. I am a 1nvest business development manager.
And I'm Lisa Guscott, and I'm a wealth manager at Standard Bank Wealth and Investment.
Thank you once again. Lisa, I think, you know what, since 2020, we've all been seeing flames. We've been seeing flames, whether it is from the losses that we've had in our personal lives, whether it is from the pandemic, whether it is from job security, and especially from our financial planning and our finances. So I really thought it was apt that the JSC theme is planning for a future of unknowns, because goodness, the past year has shown us how important it is to actually have a plan in place.
Absolutely. I think you really want to be able to take control of your financial journey. So it's imperative that you have an investment plan in place that suits your objectives, your goals, your time horizon, and risk profile.
And you know what, one thing we need to get started or get right before we get started is really to define the difference between savings and investments. Savings being a lot more shorter term and money is easily accessible, whereas investing is a lot more longer term. There's certain asset classes that you would go into or certain strategies that you will have to adopt. But I think that is also part of understanding and educating yourself about how to really plan for a future of unknowns, and also going into addressing issues such as investment gaps.
100%. I think that over the recent years, there's been so much focus on closing the pay gap, but not much focus on closing the investment gap. And the investment gap exists for a number of reasons, but one being that women tend to earn less than men. So you earn less, you have less to invest and grow your wealth. And two, confidence. We've all grown up in different homes, different backgrounds, different circumstances. And I was recently chatting to a lady who said that she was brought up in a home where her dad sat her and her sisters and her mum down and told them that finance wasn't for women. They shouldn't try, they won't understand, it's not a place for women. So we are shaped by our backgrounds and the circumstances that we grew up in.
That's how we end up deferring our financial decisions or financial strategies or financial planning to our spouses, our partners, or whoever it is. We don't take responsibility for it.
Yes, and I see that so often. Even highly qualified, well-paid, incredible women who are fully capable of owning their own investment journey, they just defer it to a husband, a partner, their significant other, a male counterpart, because they just have this frame of mind that it's not for me, I can't do it.
Yeah, and there's no excuse for it nowadays, because in platforms of trading platforms such as Standard Bank Online Share Trading, OST, or in 1nvest, there's so much information. There's a buffet of information that is there for you to access and get, and educate yourself at different levels, so that you understand what you're doing, and then you are able to bridge that investment gap that women tend to suffer from, and that still persists in this day and age.
We are so fortunate in this day and age that there is so much information at our fingertips, and we just actually have no excuse not to educate yourself and not to own your own journey, because you can. There's no reason not to.
Absolutely, Lisa. As you know, I completely agree with you there. But one thing that we must also realize as women, that we tend to also in our savings or whatever we're doing, save just for a rainy day. We don't actually properly strategize. Because I think that's what the theme about the JSC planning for a future of unknowns is really about, is how to strategize, how to have a diversified investment strategy, not just to just save and just to have a 32-day notice of account or a money market account and then that's it. What we're saying is that not just savings, you need to add investment vehicles such as ETFs, unit trusts, index tracking unit trusts, and those kind of vehicles into your investment pool, but also diversified in terms of asset classes. Are you in bonds? Are you in commodities? Are you in equities? Are you in property? All of these things which are also available as investments in 1nvest. But what we're trying to say is you need to start being more deliberate about it. It's not just about a rainy day.
Definitely. And I read a really scary statistic recently that women who do invest, 72% of their funds are held in cash and cash equivalent type
Gosh,
investments.
72%.
It's a really scary stat, because ultimately your inflation is just going to erode any funds that you've accumulated in short-term investments or saving accounts. And I'm not saying don't have a savings account. I'm just saying I would suggest that you also think longer term, and you look at the other asset classes, like you said, that bring more growth assets. And you don't have to be an investment guru, understand the ins and outs of every single instrument that's qualified as an equity investment, but understand what benefits and risks each asset class comes with.
Yeah, absolutely. And one of the things that I think is really important is that you need to also understand that in every single kind of investment that you make, and in every single kind of investment that you try to go into, you need to be able to diversify, so that in a certain investment bucket, 5-year investment bucket, for instance, you've got equities. In a maybe shorter term bucket, you've got your fixed income, such as your bonds or your money market or whatever it is. And in even shorter, you've got your 32-day notice account. So you need to diversify in terms of time also, which brings me to another point. A lot of people think that, they can time the market. Oh, no, don't worry. I know when I will be in. I know when I will be out. I mean, this is what we pay investment gurus, as you were mentioning also earlier. This is what we pay portfolio managers to do for us, to time the market for us, because we also don't have access to the information that will allow you and tell you when you must be in, when you must be out, how long you must be in, how long you must be out.
Exactly. And I see it so often where people try and time the market by themselves. By the time you're reading something in the paper, it's old news. So, and this adopting the strategy of speculative investing, where I'm going to time the market, you often find, the shortfalls are: one, no one has a crystal ball, so no one knows what's around the corner. Number two, it's an emotional roller coaster. When do I get out? When do I get in? And number three, it becomes a very costly exercise. Not just the in and out, the transactional cost, but again, I was reading a stat over the weekend that just over the last 10-year period, if you just missed 2 of the best days in the market because you felt that you could time the market, your investment value at the end of the 10 years, there'd be a 23% difference between you and the person who stayed the course.
Good Lord. And that 23% counts for so much. It can make the difference either way for you. And, I think one thing that you're saying that is very true is that we pay managers in order to have the skill to know when to be in and when to be out. But instruments or investment vehicles such as index trackers, such as ETFs or index tracking unit trusts that 1nvest offers, these vehicles also allow you to let go of that decision, to not be involved there, because either way you invested in the index. So whether you're going through OST and getting ETFs, that are traded on the stock exchange, or you're going through 1nvest and getting index tracking unit trusts, either way that decision is taken away from you. You are in the market, so whatever the market does, you're always going to benefit accordingly.
Yeah, and I think the only way that we can grow our confidence is through knowledge. And that knowledge, exactly like you said, doesn't mean that you actually have to be trading in and out. You find the correct solution for your investment process, and then you trust that investment provider, and you stick to your process. But you have the knowledge.
And it's a long-term process.
Exactly. It's a long-term process, and you have the knowledge, though, to understand what you are invested in and why you invested in it.
Absolutely. And obviously, just to wrap up, obviously time is not always on our side, but just to wrap up, what you're saying is really 3 important things. Firstly, you have to take responsibility for yourself in bridging that investment gap. And there's knowledge. Knowledge is key. There are platforms such as OST, Standard Bank, or online share trading. There's 1nvest where you can go and learn more about how to invest in index tracking, right?
Yes, and it's important to remember that it's not just about saving for a rainy day.
Absolutely. Don't just do that. Have buckets, spread it out. Make sure that you've got you covered in every single investment horizon. And also, lastly, what we're saying is, please don't try to time the market. You don't have the skills nor the resources in order to do that yourself. It's a lot of luck also even in it. But also, what we're trying to say is index trackers potentially are a solution for you that can coexist with some active management. But index trackers such as the 1nvest unit unit trusts and ETFs that you can get through 1nvest or OST. That is the best way that you can do justice to your portfolio. And thank you so much for joining us today.
Thank you very much.